Real estate is among India's favorite investment classes. Institutional investors poured in 4.2 billion US dollars, whereas NRIs bought real estate worth 13.1 billion US dollars. It is this enthusiasm to own more and more land that is set to take the Indian real estate industry to a market cap of 1 trillion US dollars by 2030. And based on this enthusiasm, the government is launching the National Land Monetization Corporation. What's that? Listen to find out. Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Click on the subscribe button to never miss an update from us. Here's your story for today. The Indian government, like the Indian people, is also fond of land. It owns around 13,505.44 square kilometers of land in India, which is divided between several central public sector enterprises or CPSEs and ministries. That's about 9 times the size of Delhi. The government has been buying all this land to boost infrastructure development, but now quite a lot of it, approximately 9,510 square kilometers, is just lying unused. So, why not put it up on rent or lease? That's exactly why the National Land Monetization Corporation, or the NLMC, was born. To strike deals with the private sector to convert this idle land into a resource for the government. It has been allocated an authorized share capital of 5,000 crore rupees and paid up share capital of 150 crore rupees to start with. Plus, CPSEs have also identified 3,400 acres of land that the NLMC can start leasing or renting out. In fact, it could also invite public investment in these lands through real estate investment trusts. So, it is almost ready for business. But why set up a separate company for leasing land? Because the government feels that NLMC will be able to strike deals faster if there's no government bureaucracy involved. Furthermore, if a particular private player finds a government plot or building particularly useful, they could consider buying it from the government. This could help the government sell off a CPSE's asset and strategically divest it or shut it down. But why did the government suddenly come up with this idea? You see, India is already the sixth largest country in terms of government spending. That's 330.52 billion US dollars. However, we are still a developing country and we need massive amounts of investment in infrastructure to achieve our goal of becoming a 5 trillion US dollar economy. So, why not use the existing infrastructure to generate more revenue and create more infrastructure? India is not the first country to think of this plan. Many other countries, like Australia, are also recycling government infrastructure to make full use of it. Well, land is not the only asset that the government is planning to monetize. Under the 4-year National Monetization Pipeline launched last September, the government has also devised plans to utilize other unused core assets like roads, railway stations, airports, and so on. How? By leasing them to the private sector. Yes, the government has come up with several models like operate, maintain, transfer, toll, operate, transfer. Under these models, a private sector enterprise can lease an airport or a road, contribute towards its management, and earn money from its operations. How do you earn money from a road? By setting up a toll booth. Sounds simple, no? All in all, the plan has the potential of earning 6 lakh crore rupees for the government. The move highlights the government's growing push to bring in the private sector to govern public assets. Plus, this way, the government does not have to divest off all its public sector enterprises. A win win situation? In theory, yes, but in real life, the plan has many flaws. For instance, the government has no way of determining whether the private sector will be interested in a particular government core asset. Some rural swathes of land may even be useless for business and may not attract any bidders. This is exactly why the auction of railway routes last year was a failure. Though it attracted several bidders, ultimately no one was interested in leasing the railway routes for 35 years. So the auction was just a waste of time and effort. Secondly, it is very difficult for private players to determine what the appropriate bid for such a long term investment should be. For example, if another lockdown is announced tomorrow, the company that bid on railway routes would lose a lot of money. So, how can it decide what the fair value of the contract is? This dilemma could also put off many investors. Also, since they have to ultimately return the asset to the government, there's no incentive to develop the asset or maintain it efficiently. Also, since they have to ultimately return the asset to the government, there's no incentive to develop the asset or maintain it efficiently. This could come back to bite the government later. And lastly, and most importantly, the entry of private players in this public sector environment may pinch our pockets. For instance, roads which were initially free to travel on could now have heavy tolls. Railway ticket prices could be increased by the players to get the most out of their investment. So, ultimately, we could have to bear the cost of asset monetization. Nonetheless, the proposal has promise. Now, the future depends on execution. Do you think asset monetization is a good idea? Let us know on Twitter at readon_in. Thanks for listening in. Make sure to follow this podcast if you aren't already. We'll be back tomorrow.